Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. Ice raw sugar in New York. The key recent feature here has, and still is, for now at least, is the late April to date descending wedge pattern, currently 24.10 to 25.54. This had morphed from a sideways triangle into a descending wedge pattern 2 weeks ago. The core of the recent support had been the 38.2% absolute Fibonacci line at 24.88. However, Monday last week an attempt had been made to break down through it, with an unusual key reversal down. But this attempt was halted, as just below the Fibonacci line, the rising short-medium moving average, currently at 24.84, which had, I am sure, surprised some in the bearish community, was rising up and reinforcing the 38.2% Fibonacci line. I know this was a surprise to some, as last week was a weekly key reversal up, a sign to me of some unexpected and unwanted short covering, as this did not show up in the London contract to confirm it as a general bullish move. The action was enough to push up through the upper time, but not enough to close over it, and even has given cause to look at last Friday's move as a possible shooting star pattern, generally seen as a bearish pattern. The March 2012 high at 26.20 with some nearby resistance at 26.13, plus congestion early May around those same levels, capped the rise. So where does this leave us now? Well, until we have a confirmed break either above or below the trend lines of the descending wedge, we will continue to travel down within it, and also be aware of false breaks. And I cannot give an idea of the move until such directions become evident. However, I can perhaps give an idea of the size of the move. So for a confirmed break higher, the primary move will be about 1.55 cents on top of the break, with a secondary harder to reach move of about 2.55 cents. For a confirmed break lower, the primary move will be about 3/4 of a cent below a break, with a secondary hard to reach move of about 2.55 cents. Finally, there is the question of the bigger picture, and here we have an interesting pattern. I should say potential pattern. Could it be that the action since mid-March is a possible bullish halfway hesitation? We are nowhere near confirming this, and I'm not running the idea, I'm just running the idea through my mind. If that is the case, then on top of the descending wedge pattern higher, we could see a move of possibly a full 7 cents, or inclusive in that, I should say. This would be quite extraordinary should it occur, and one to bear in mind. Contrary is that we form a double top on the April high at 27.42. But we'll have to wait and see how that plays out, if we even get up there. Ice Europe white sugar in London. There are a number of possibilities in this daily chart. Let's look at what we know first. Well, we do have an April to May bull channel that broke up and out on the down and out on the downside, obviously, 2 weeks ago, reaching its target below last week, which is roughly in line with the mid-April low and the July 2012 support at 663.70. We also know that there was not, repeat, not a weekly key reversal up in London sugar as there was in New York sugar last week, and I've explained why I think so in my commentary on New York sugar today. Then we move over to the possibilities of what may be happening. We have a possible late April, mid-May bearish shift pitchfork, one that has been breached on the lower time, currently at 672.20, but not seemingly broken. The market is currently in between the lower time below and the middle time above, which is currently at 694.90. I am not in love with this pitchfork, not yet, but it is there, and for the moment I'll leave it. Then we have two big patterns, possibly a 3 peaks and domed house pattern and a possible rounded top. With the 3 peaks and domed house pattern, it is a rare but large pattern, and as a consequence, though I see elements of it here, I'm not happy about it being a true pattern here, and we'll leave it at that until I see further evidence. For the rounded top pattern, there is a greater chance and opportunity. This pattern hasn't worked through yet, and it could still morph into another pattern, such as a descending triangle or something else. However, whilst it is too early for such a pattern to have been executed, I can give an idea of the potentials for such a pattern. Thus, for a confirmed break higher, the primary move would be about $39 on top of the break, with a secondary harder to reach move of about $67. For a confirmed break lower, the primary move would be about $9.50 below a break, with a secondary harder to reach move of about $67. It's still too early for these patterns, but I thought you should know, just in case. Sugar white premium spread. We are far into 2023 and this chart continues to be very colourful. Many things are going on all at the same time. Okay, so I'd previously spoken about two big picture items seen here on this weekly chart. We have the recurring big old bullish Andrews pitchfork from 2019 to 2021 highlighted in dark blue on my weekly chart, with the market at the moment in between the lower time below, currently at 101 3/4, and the middle time above, currently 175 3/4. I have said this many times before, and I'll repeat it here again. This pitchfork, despite being breached in the past, still continues to show the overall major bullish angle of attack. Next, we have an ascending expanding wedge pattern, highlighted in bright red trend lines and above the current market. This was formed between mid-April to late November last year, and is currently 184 1/4 to right off the top of my weekly chart. To me, it was and still is not the best looking of such wedge patterns, but it is also still out there, despite being tested as recently as mid-April this year, and it comes with all the possibilities such a pattern evokes. The most recent activity had been the market's move up through the slowly rising long moving average, currently at 131 and a half, followed by a move down and all the way to the slowly rising medium moving average, which is currently at 125 1/4. That's where we are currently at the moment. This action has pushed down through the 250% Fibonacci lines at 128 3/4 and 131 and a half, and the June 2020 high, 134 even, much as if they weren't even there. But the medium moving average has managed to hold up the market so far. Last time I was wondering if perhaps a bullish pitchfork for the August 2021 to February 23 action may be on the cards. I didn't draw it then, but I have done now, both for bullish Andrews and bullish shift pitchfork, and for the moment I will just leave it there and not highlight them, as it neither adds nor subtracts, neither of them adds nor subtracts from the current action. A final point, and it's a big picture item. It's look at the whole of the 2022 to date action as a possible huge diamond top. I'm just lodging that idea in my and your mind, as there are elements of such a pattern here, but also enough going on here that I don't wish to add to the mess of lines we already have on my weekly chart. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.